which would be 10% of the total production cost. Then required return on sales revenue is 20%. So this total cost. So it's, now we add profit margin, required return. Return is profit. Profit margin has to be added. Then we have the sales figure. But profit margin is added on sales. It's the percentage calculated on sales. Now we do not know what is sales, but the profit margin is calculated on sales. So base becomes sales, sales will become 100%. If this is 100%, then we have the profit margin as not 10, 20%. 20%, so cost will become 80%. Cost plus profit is sales because profit is calculated on sales. Therefore, 35.2 is 80%. The rest of the figures we can calculate is equal to 35%, 35.2 into 20% divided by 80%. And then when we add them up, 44 is the sales price. 176 says a factory's entire machine capacity is used to produce essential components. The cost of using the machines are as follows: variable cost, fixed cost. If all the components are purchased from an outside supplier, the machines could be used to produce other items which would earn a total contribution of 25,000. The maximum price that a profit maximizing company should be willing to pay to the outside supplier for the component is. Did we do this one? No, we didn't. Now, the total cost of manufacturing, the cost of using the machines are as follows: 65,000. The decision which is with the purchasing from an outside supplier about the components. The decision criteria earlier also we've discussed. If it is make versus buy, in case of making, it is the variable cost and the fixed cost. These are the costs which are incurred. If it is buying, it is the fixed cost plus the supplier's price. These are the cases. So fixed cost is completely an irrelevant cost. The relevant cost is the variable cost plus the variable cost and the supplier's price. But here in this particular case, it also says that if they go in for purchasing all the components from an outside supplier, these machines could be used to produce something else, and then contribution will be 25,000. That is a situation when they do not make that. So when they are making the component, when they make the components, they are foregoing 25,000, foregoing the revenue from utilizing the machines some other way. Opportunity cost is the benefits which are foregone from the other alternative. So that is an opportunity cost. If at all, if there is an opportunity cost, now that cost is should be considered because the machines are still put into use. They are foregoing whatever is the foregone revenue is an opportunity cost for them. So that foregone revenue has to be considered here. Opportunity cost. So the decision is between the variable cost plus the opportunity cost and the supplier's price. So the supplier should be charged. Now the decision is here, the what is the supplier's price is not given that we can choose this one or that. The question is asking us what should be the price charged to the supplier. What is the maximum price? Maximum price to the extent that it is variable cost plus the opportunity cost. Anything below that is beneficial. If it is the maximum is this, that is an indifferent point. Okay, so how do we present it? A 177 says the standard output from a joint process was 5,000 liters of product K, 3,000 liters of product L, and 2,000 liters of product M. The total cost of the joint process was 156,000. The company is now deciding if it should modify product K by putting it through an additional process. In order to help with that decision, the best way to apportion the joint cost of 156,000 to the product is very little information is there. All what we have is about the physical quantity, nothing beyond that. We just have what are the physical quantities. No selling price, no nothing is there. So, how should these joint cost of 156,000 be apportioned? Um, in order to help with the decision, the situation is about in order to help with the decision. What is the decision? The decision is putting it through an additional process. So, the explanation for this one is when the products pass through the same process and they get separated at the split off point, if this is the split off point, after the split off point, if they are separated and further processing is taken up, the decision criteria, the question is asking us what would be the decision criteria, that whether they should be sold at the split off point or after further processing. So in that case, how do we decide? The decision will be what is the relevant revenue versus what is the relevant what is the incremental revenue versus what is the incremental cost. So we should have two sets of data. That is, one set of data talks about what is the selling price at the split off point, what is the selling price after further processing. So we compare these two things and talk about what is the incremental revenue. Then we talk about what are after separation costs. That is the incremental cost. Then make a comparison between the incremental revenue and the incremental cost to understand, to decide about um, whether it should be sold at the split of point or after further processing. We absolutely have no clue about any other information, no way to arrive at that very basic information, that what is the joint cost, what is the physical quantity of these three products. So we do not know how to decide. So on that note, we can go with D as an option. 183 says a one-off project required 60 kgs of a liquid which was purchased for $12 per kg. The liquid isn't regularly used in the business and there are 40 kgs in inventory. The inventory can be sold for $4 per kg and the material would cost $15 per kg to replace. The relevant cost of using the material in the project is. Quickly, let's look into the long back we've done. More than 10 days, I guess, we have not had a class. I'll take you through the. One second. What are the costs which are relevant? The costs that are relevant are, we see that all variable costs, then the opportunity cost, all cash flows, and then future cash flows, the incremental cash. These are all relevant. The irrelevant or the non-relevant costs are all the historical sunk costs, committed, notional, and depreciation costs. Now the question has two sets of data. That is, first one is a one-off project required 60 kgs of liquid which was purchased for 12 per kg. The liquid isn't regularly used in the business and there are 40 kgs in inventory. The inventory can be sold for $4 per kg and the material would cost $15 per kg to replace. The first set of data, 60 kgs of liquid which was purchased for 12 per kg, is the sunk cost. It's already incurred. So now that is not very relevant for decision making. So if it is not relevant for decision making, we would not consider that. But then what is relevant for decision making? It says that 40 kgs of material, 40 kgs of material, the liquid isn't regularly used in the business and there are 40 kgs of material. The inventory can be sold for 4 per kg and the material would cost $15 per kg to replace. So replacing the replacement cost is relevant for decision making. There's only one historic cost. The other two sets of data are relevant for decision making. So the inventory can be sold for $4 per kg. 40 kgs of material, $4. What is this category? It could be sold. So that is indicating that this is an opportunity cost. It's there in the business. It is there in their with them. It was purchased long back. It was not put to use. But now, if it is considered, they could have sold it at 4 per kg. So this is totally an opportunity cost, which will be 40 into now, and the material would now cost 15 per kg. So the cost of material, which is a variable cost in nature, plus the opportunity cost of 160, will be the relevant cost of material in this particular project. Cost of material, we have it as 40 kgs into 60 is already present. 60 is the requirement. Out of that, 40 is already present. So additional material which they have to purchase is 20. So we have this as 20 into 15. A manufacturer makes and sells a product with expected sales and the production of 50 units per month. The accountant has also gathered the following information. Prime cost is their fixed overhead per unit, non-production overhead per unit. This product has a dedicated investment of 500,000 and the manufacturer requires a return of 12% per annum on this investment to the nearest. Yes, yes, please. The recording anyway will be available, so don't have to be worried. Can follow that. Um, a manufacturer makes and sells a product with expected sales and production of 50 units per month. The accountant has also gathered this information. To the nearest dollar, the price per unit to be set in order to achieve the manufacturer's target return on investment is. Okay. We've done just now a similar question. So take it up in that particular fashion. Prime cost is 180. Then we have fixed overhead. That is 40. Then we have non-production. That is 20. Add them up. So that's the total cost. Total cost. After the total cost, we have to add profit margin. See, the product has a dedicated investment of 500,000 and a manufacturer requires a return of 12% per annum. So let's present it here. A return on investment is equal to 500,000 is the investment. The total investment is 500,000. The expected return is 12%. So that comes out to be the total amount of return. But since the cost details are given as per unit. So we see that it is given as 180, 40, 20. These are all per unit. The return on investment is the total amount of return, 500,000 into 12%. So now what should we do is we have to divide it by the total number of units to find out what is the margin per unit. So 500 into 12. This is total return on investment, but that can not be added here. We need to make it as per unit. A manufacturer makes and sells a product with expected sales and production of 50 units per month. So every month it is 50 units. So in a year, because the return which is given is per annum, this 60,000 return is per annum. So if it is per annum, it would not be appropriate. So let's make it as per unit, return per unit. Production is equal to 50 units per month into 12, which is equal to, this is 600. So return per unit is equal to, this will be 60,000 divided by 600, which is 100. Return on investment is 100. Then we have the selling price. Yeah, even after the exam, students are not coming.
Yes.
They don't write any exams, CIMA exams. Did you write?
I didn't understand your question. Ma'am, we are exempted from 7 papers. We only have to do the operational case study.
Okay. Okay. That's why they feel that this is not relevant for them.
Yes, ma'am. So they said that we will cover all of the modules, and then because the operational case study will take from all of the modules, ma'am. So they give us training
case study, dealing case study is not
to write the papers. We can.
But without the basic subject knowledge, it's very difficult to deal with that because it is built so intricately into the case, the various aspects. Unless and until you have a hold on the subject, it is difficult. It is, and let them learn the hard way. What can we do? At the comfort of your home, I mean, everybody as of now, whether it is comfort, discomfort, training is being provided. So why not avail that? Later on, if to sit with all this content is very, very difficult. Any batch from your college has attempted, or your batch is the first one attend the case study exam?
We are technically the second batch that is trying this program.
But voice is completely
There
breaking.
are a lot of problems with the first batch because of some
No, voice is completely.
misunderstanding between
No, voice is
we did
breaking.
not.
I'm just not able to get anything. Voice is completely breaking. Yeah.
Now can you hear me, ma'am? Ma'am, can you hear me now?
But the clarity, always there is that clarity is missing. Maybe the connection issue. I do not know.
Ma'am, I'll type it in the chat box if you want.
Yes, 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 yes. Okay, okay. You're the second batch. But I think it takes some time until that seriousness builds in a college. The initial batches always are either under. Okay, okay, okay. You take it up seriously and then do that. I know. But that also only two of you. Technically speaking, only two of you. On and off, one or two students keep coming. But that seriousness is seen only in two of you. You have put in that effort to attend all the classes and then take it seriously. But others, I do not know. So getting enrolled into a program should be taken it up very seriously. Otherwise, there's no point in that. Okay. Okay. So 186 question number 20 hours of skilled labor is required for one off project. Existing skilled staff are paid a fixed salary that is equivalent to $35 per hour. These staff are fully employed. Alternatively, the work could be outsourced to an agency who can produce equivalent skilled staff at $45 per hour. The relevant cost for skilled labor in the project is the requirement is for 20 hours. The requirement of work, the number of hours is for 20 hours of skilled labor is required. Existing skilled staff are paid at the rate of 35. But is that relevant for decision making? These staff are fully employed. Alternatively, the work could be outsourced to an agency who can provide equivalent skilled staff at 45. Since they are fully employed, since the workers are fully employed, they cannot be used for this new project. Okay, so they have to hire skilled workers from outside. If there was any available capacity, if they can be accommodated, the cost would be 20 into 35. But because they are fully employed, now the existing staff cannot be used. So they have to hire new staff, and the new staff are paid at a rate of 45 per hour. The relevant cost for skilled labor, since they are fully employed. That's the whole concept here. Relevant cost of labor is equal to requirement is for 20 hours into, now the equivalent cost is 45 per hour. So here it would be 20 into 45. 900.
Ma'am, you're muted, ma'am.
I close the door of the room, so the internet is getting disconnected. I'll shift to some other connection. Just a second. Okay. Question number 187. Now there will be no disturbance. Question number 187 says, a business is considering closing one of its branches which has the following budgeted performance for the next year. We have revenue, variable cost, fixed cost, budgeted profit or loss is given. Variable costs include 50,000 for labor cost. These staff would not would have to be made redundant at a total cost of 20,000. Fixed costs contain a fixed rent charge that is specific to the branch of 60,000 as well as 40,000 of centrally allocated costs. All other fixed costs will be saved if the branch is closed down. What will be the net benefit for the year of shutting the branch? Shutting down the branch, uh, see the when the activity is not carried out, then all variable costs are relevant. They would be eliminated. Then in that case, even if they shut down, there are certain unavoidable fixed costs. Those unavoidable fixed costs will be incurred. But anything which can be eliminated, the avoidable fixed cost also has to be looked into about, is there any amount of fixed cost which can be eliminated? That is what has to be looked into. Fixed costs contain a fixed rent charge that is specific to the branch of 60,000 as well as 40,000 of centrally allocated costs. all other fixed costs will be saved if the branch is closed down. Total fixed cost is 150,000. Out of that, they say that the, the fixed cost contain a fixed rent charge of 60,000 as well as 40,000 of centrally allocated costs. So 100,000 will not be incurred. The rest of it will be incurred. Now they have a loss of 150,000. So we see that there is a loss of 150,000. If they eliminate or if they shut down these, one second. Okay. So if they shut down this particular unit, in that case, they will not earn any revenue. Okay. They will also eliminate all the costs. The variable cost will be eliminated. So that becomes zero. Fixed cost of 150, out of that, a part of it will be eliminated. So let's present it on a comparative note. We can also present it. At present, if it is shut down, at present we see that there is revenue, then we have variable cost, then we have fixed cost. So the revenue thing at present we have it as 200, 200, then we have minus 200, then we have minus 150. So that's why there is a loss of 150. So there is a loss. If they shut down, the revenue becomes zero. Variable cost also becomes zero. Technically, if there is no other information, we see that fixed cost will be incurred as it is. But now here, we see that there are fixed costs which can be eliminated. The fixed costs that can be eliminated are, it says that variable costs include 50,000 for labor costs. These staff would have to be made redundant at a total cost of 20,000. Okay, so that is one aspect. Then fixed cost contain a fixed rent charge that is specific to the branch of 60,000 as well as 40,000 of centrally allocated costs. So that comes out to be 150 minus 100. So this is 50. 50,000 paper. These stock would have to be made redundant at a total cost of 20,000. So 20 will be required minus 20. So 100 will be incurred. All other fixed costs will be saved if the branch is closed. So that should be 50 minus 50 fixed cost of minus. Chances are not matching 0, 90, 150, 170. 50.
Why is the fixed cost 50?
Why is the fixed cost? The question says that all other fixed costs will be saved if the branch is closed. All other fixed costs will be saved.
All other fixed cost except the fixed rent charge and the centrally allocated costs.
So these things will not be incurred, no? 60 plus 40 is 100. Out of fixed cost, 100 is incurred or it is not incurred? Fixed cost contain a fixed rent charge.
And they have
Rent will
defined
be
fixed costs, and then they say fixed cost other fixed costs will be saved. So
100 will
fixed
be
costs that
incurred.
are not, that should have been saved by some logic.
So fixed rent cannot be saved. So 60 is there. Centrally allocated when the activity is not carried out. So if it is 100, even in that case, if it is 100, also 120. Answers are not matching. 0 is there, 90 is there, 150 and 170. We want the net benefit. As of now, they have a loss of so their loss will be 70. 70 and 150. No option is matching. What will be the net benefit of the year?
And when you put 50,000 as fixed cost, by what logic did you put it there?
What I was thinking is, I think they will be, because shutting down, there would be no fixed cost, fixed rent will be incurred, and since the unit is shut down, no centrally allocated cost will be allocated to this particular unit. Out of 150 fixed cost, 100 is not incurred, so the rest of them will be incurred 50. That is what I assume. All of the fixed costs will be saved. So what is the only cost which is incurred is fixed cost contains the rent charge that is specific to the branch. Branch. So rent will not be incurred.
Rent fixed cost will not be incurred, but centrally allocated cost will be incurred, because it is not specific to that branch. It's what is the it's a general thing that's given to everything.
So it is
So it will
only
be 150
out of that
minus 40.
centrally allocated will be incurred. So the total loss is 60. I think then it comes. Earlier the loss is 150, now the loss is 60. So the difference between these two is the benefit. The loss was to the extent of 150, now the loss is only to the extent of 60. So the benefit is difference between these two, which is 90. Only the centrally allocated fixed costs are taken, 40. The rest of all the costs, rent will not be incurred, other fixed cost will be saved. Then 60 and the other fixed cost, all of them are saved. 40 will not, because 40 is allocated cost. If 40 is all what is incurred, then the total 20,000 of the those staff who would have to be made redundant at a cost of 20,000. So they have to incur that 20,000 also. Um, Closure cost at the time of closing down cost, at the time of closure, certain costs which are incurred. Now those are 20, these are 40 allocated cost, total cost is 60, no revenue, zero is the revenue. So the loss is to the extent of 60. But earlier when the activity was going on, the total loss was 150. Now it is only 60. So the net benefit from the shutting down is 90. They are reducing their loss. They are not earning a profit, but they are minimizing or they are reducing their loss. So net benefit for the year of shutting the branch is equal to 90, 90,000. The next question is question number 188. A manufacturer produces three products in the same process which has joint process costs of 10,000. Details of on the products are as follows. Three products XYZ. Volume is 400, 200, 400. Sales value per unit at the split off point is given. Joint process costs are allocated on the basis of sales value at the split off point. Product Z could be further processed for 2,000. This would increase the selling price per unit to 140. To the nearest dollar, the net benefit from further processing product Z is the value at the split off point is given. Okay, then joint costs are allocated on the basis of the value at the split off point. Z could be further processed. Only one thing is given. So let's look at only Z. Z has a value at the split off point of 120. After further processing, um, product Z could be further processed for 2,000. This would increase the selling price to 140. 120 and 140. So the difference between these two is 20. 20 is the incremental benefit. Incremental benefit of 140 is there. Then we have to compare that with the incremental cost. Incremental cost, see, joint cost is not relevant here because it's already incurred by till the split off point. Now from the split off point, the incremental cost is about the further processing cost. Further processing cost is incurred for $2,000. For how many units? The units are 400. So calculated per unit. So we get that. Let's write the solution. 188. Sales value at the split off point. is equal to 120 sales value after further processing. It is 140. So the incremental benefit is 20. 20 is the incremental benefit. This is 20. None. Now incremental benefit has to be compared with the incremental cost. So incremental cost is the further processing cost. Further processing cost is 2000. And this 2000 is incurred for all the units. How many units?
400 units.
400. So 2000 divided by 400. It's 50, no? Incremental cost is 50.
And 5.
5. Okay, sorry. It's only 5. So the net benefit is 15 per unit. So the net benefit is equal to 50. If they are getting a benefit of 20 for an incremental cost of 5, so the net benefit is 15. Either we present it in units or we can also present it total amount also, because the incremental cost is given as a total cost, which is 2000. The other alternative is this can be made as total benefit, 20 into 400. 20 into 400 gives this one. So the incremental benefit, total incremental benefit will be 6000. Either ways, because they are not very specific. The net benefit is all what is mentioned. We can present it as per unit. We can also present it as total benefit.